callers. It's day 9 roundabout for our family in Switzerland in this COVID-19 lockdown. And with the markets going crazy, mostly to the downside, I've been getting a lot of emails and calls from friends and family asking me if it's the time to go into the market, and if so, where would be a good place to sort of start to dip your toes. And when I respond a little bit with more questions, I get answers back from family saying, I don't know what you're talking about most of the time. So it occurred to me that since this podcast is about female financial empowerment, but truly financial empowerment for everybody, I thought this is a great time for me to do a very core educational series. So I'm going to record quite a few core education segments, starting with really the basics. And you can listen in the comfort of your own home, in the safety of your own home, and you don't have to be embarrassed. So it's just a good learning exercise. So let's start with, what is a stock index? A stock index is a way to measure a subset of a stock market. Why do we use it? It is a good way to make comparison performance reviews of your own portfolio or perhaps a market sector. For instance, you might want to compare small cap stocks to large cap stocks on the performance. Or across regions. So you might want to compare the performance of Latin America to, say, Europe, or Southeast Asia to the United States. And when you have an index that has a subsector of companies in it, it gives you typically a broader idea of what the overall performance is in that economy or that segment of the economy. How do they work? Let's take the S&P 500 as an example. The S&P 500 is regarded by many to be a good representation of the United States overall stock market. But let's understand how it's structured. The S&P has the 500 largest companies listed on a U.S. stock exchange in its index. So we're only talking about stocks that are publicly traded that you can buy and sell shares of on an exchange. How do they measure large? In this case, they use what's called market capitalization of each company. That means that the S&P 500 is a capitalization weighted index. Thus, it is not an equally weighted index. The 10 largest companies in the index approximately account for 21 to 22% of the performance of the index. So all stocks in the index are not going to contribute to the performance equally. Let's use Microsoft as an example. We'll show you a chart of the Yahoo summary page for Microsoft. On the right side, you will see market cap of about $1 trillion on March 20th, 2020. How do you know what the market capitalization of a company is? To find the market capitalization of a company, you would look at the outstanding shares, but specifically the free float shares times the current market price of the company. Again, using Microsoft as an example, the calculation would be on March 20th, $137.35 times 7.5 billion shares of free float outstanding that one could trade in Microsoft. That's approximately 1 trillion of market cap. What's float? Float's the number of shares that are unrestricted and free to trade. To get this number, you take the total number of outstanding shares and you subtract the restricted shares. Restricted shares could be used for management and employees, and they're tied up. So that's why we use free float. Those are the ones that are actively traded and open for trading on the market. If you look up Microsoft on Yahoo Finance again, and you go to the statistics tab and you go down a little bit to the middle of the page on the right, you will see shares outstanding, and then you will see float. And it's the float that you would use in that calculation. Okay, so the S&P 500 has the 500 largest capitalized stocks on U.S. exchanges. Another big index that you will hear on TV and newspapers is the Dow Jones Industrial Average. The Dow is made up of only 30 companies, what we call blue chip companies. It's not a great measure of the overall economy. Those blue chip companies in the index tend to be the dominant player in their sector. So you will have companies like 3M, Apple, Boeing, Chevron, Caterpillar, Microsoft again, Intel, and so on. I'll put a link to both the S&P 500 and the Dow Jones constituents, so if you wanted to look for yourself, you can. Unlike the S&P, Nasdaq, and the Russell 3000, which are other stock indexes, the Dow is a price-weighted index. It's less straightforward to calculate as well. This means that companies with higher stock prices have greater weight in the index's calculation. To calculate the index, they add up the stock price of each of the 30 Dow component stocks and divide by 30, and then divide by the Dow divisor. We won't get into the calculation of the Dow divisor, but just know that it's used to adjust for dividend payments and stock splits. The takeaway I want you to have on the Dow is it's a very small representation of the overall economy. You want to make sure, if you use it as a performance comparison with any of your stocks or mutual funds, that you use it against the right investments in your portfolio. So you generally want to compare the Dow to some very large cap investments that you have, big-sized companies. The last index that I want to highlight today is the Nasdaq. The Nasdaq composite is made up of more than 3,000 common equities listed on the Nasdaq stock market. It's one of the ones that are most followed alongside the Dow and the S&P 500. It was established in 1971, which I personally believe to be a very good year. At that time, it was the first electronic stock exchange in the world, and it helped attract new technology companies to its trading platform, like Microsoft, Dell, Apple, and Oracle, just to name a few. The main types of companies on the NASDAQ will come from technology, consumer service, healthcare, and the financial sectors. Like the S&P, the NASDAQ is a market-weighted index. Again, that means that the largest companies in the index will have the largest impact on the performance. So that's both on the upside and the downside. So if one of the largest companies like Microsoft has a very good day, that's going to impact the performance of the overall NASDAQ composite index. Same if now Microsoft were to have a very bad day. As of March 15th, 2020, the industry weights for the NASDAQ were technology about nearly 50 at 48%, consumer services about 19.5%, healthcare with about 10% of the index, financials 7%, industrial 6.85%, consumer goods 5%, and then the last four are just fractional. So this kind of gives you an overview of those major indexes that you will see on the television moving up and down, lately more down. Now, you're armed with the knowledge of what a stock index is, and hopefully you understand a little bit about why we use it as a performance comparison or an insight into how a particular segment of the economy is doing. But you cannot actually invest directly into an index. So you need to know the next stage, which is if you want to invest into a vehicle that will give you the return or close to the return of, say, the S&P 500 or the NASDAQ or the Dow, you're going to need a vehicle for that. And our next segment will be on exchange-traded funds. So stay tuned, and we will follow this up shortly with a segment on exchange-traded funds. In the meantime, have a good day, stay as calm as possible, and we will get through this together.